So, hello, hello, hello. How's sound? We doing okay? Testing, testing, testing. Oh, excellent, excellent. Okay, good stuff. So, no trade calls, no recommendations. Everybody responds for their own stuff. We're here for educational purposes only. We're just talking charts. We're just having some fun. Hey man, how's it going? Hello everybody. Good to see people. Thank you for writing in on the comments. It's always better than talking to myself, not knowing if anybody's around. Yeah, it looks like the YouTube notification that the stream's gone live aren't going out, so I'll have to check that out. It's a little bit strange. So let's see what gives, and let's just talk some charts. As usual, I have no agenda. I have some time to kill. More than happy to pay it forward. So if anybody's interested on what I have to say or what I have to, the way I'm looking at markets or an opinion on whatever chart you may be looking at, let me know and I'll do my best to cover it. We'll stay on as long as we need to, within normal limits, of course. But let's do this. So what's going on? What's going on? We're going into an interesting week, right? Yesterday on paper was the slowest day of the week, and now things should get a little bit more interesting. You know, we had the RBA today. We got ISM Services PMIs, JOLTS out today. We've got Bailey, ADP, BOC coming up tomorrow. Then we have weekly jobs on Thursday, non-farm payrolls, University of Michigan, consumer sentiment, and inflation expectations on Friday. So again, it should be interesting. All in all, in a situation where the Fed the FOMC is in a blackout period and we're at a pre-OPEX week, so it should be interesting. Keep in mind, for those of you, you'll be looking to roll futures towards the back end of the week, and we'll soon be in spring 2024 trading the new contract, right? So let's see what gives. Here we're in a market which wants to believe higher, a market that wants to believe that we're going to see rate cuts very aggressively sooner than anybody had ever thoughts before. And as far as that's the case, you'll see the market try to continue to rip higher, bonds higher, stocks higher, and every micro dip is going to continue to get bought. Now, even when you got Powell out last week saying that they're not convinced they're done, they're ready to hike again if they have to, the market just hears buy, 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 buy. And what we're seeing here, which is confusing some people, is just a rotation, right? You're seeing a rotation out of tech into value. And we talked about this in the webinars and stuff since the CPI print, right? The trade to have on, if you don't want to be naked, is short tech, long value, or short NQ, long RTY, short NQ, long YM. Also, because going into December, going into seasonals, you see the back end of December, you have those, small caps tend to outperform. And when they go stupid to the upside in terms of outperforming, anybody who's kept an eye on that or looked at the dynamic in the past knows that there's a different pump there, and there are a lot of trades to be had there. Now, again, all that to say that you should expect to see dips try to get bought unless there is something significant. It's not going to be enough for Powell to say something. The market's not going to believe. The market is not interested, right? But if we get some data prints, back-to-back data prints that come in a little bit hotter, something has to reprice, some kind of geopolitical risk, something concrete, then this is a bullish market that wants to go higher, that's going to keep on buying every dip, but it's a market that's moving higher on weak structure. What does that mean? It means that it can continue to go higher. It can continue to go higher in a stupid fashion, but since it's a building and moving on weak structure, the first real catalyst hits, there are a lot of air pockets to the downside that need to be filled. That's all, okay? So that's pretty much where we are right now. In a little bit of a shorter term basis, we've got the higher time frames that are in control, and basically the move here is, are we going to see a little bit of a strengthening of the dollar, and we'll have to see how we get through this week. But the other most interesting thing that's happened really is the gold, right? And we've been discussing this for a long time, and I kept on telling people, there are a lot of very interesting gold plays but you have to be long plays, but you have to be careful when you start to move into this area, right? You have to respect the fact that, we've been sold hard at these levels. And what we said is, you can try and stay long, but if you break those highs and you cannot attract new buyers at highs, you can't attract new buyers at highs, you can't attract new buyers at highs, you can't attract you like this, you have to be careful because you can go back and back test on charts. It is extremely rare to see this kind of failure and not see downside follow through. And the same thing as we were discussing yesterday, it's extremely rare to see this kind of daily candle and not see a new low print. Okay, so here you want to keep an eye and see how we trade on the weekly close. But right now, really, if you're on gold, you're looking, this is not cheap enough to buy, right? And really the probably here, the nice buys are either lower or higher, right? But here it's definitely, this is a very ugly, very ugly candle to say the least. Okay. I'm just going to go through a couple of other charts, which I think are interesting. And then I'll tackle GPBAUD and Euro CHF, because it looks like those are the two things that have been asked for. So here, in terms of gold, right now, don't be, a lot of people also talking about seasonal plays, but you have to make sure you understand the seasonal plays, right? So for example, even in stocks, the Santa rally, the seasonal play in stocks is actually the last 5 days of December and the first 2 days of January. So it's not by the 1st of December, right? Also, we've got strong seasonals shaping up for gold into January and February, but that doesn't necessarily mean buy on the first week of December. Usually it tends to be a better buy towards the FOMC meeting. So here, what I would be saying in gold, what you want to look at is any move back down into 2000 that holds could be an interesting level, even though it would be far nicer to get a chance to buy 1800, right? But these have been and remain the key bull bear lines I would continue to focus on, okay? Now, the other thing is, we've been talking about this for a long time. Also, another way to play the tech weakness is if you look at NVIDIA, right? The fact that we keep on pressing on this 500 and we can't get through. This is extremely nice location for asymmetry. What does that mean? These kind of areas are very interesting, both if you want to get long or you want to get short, because on a break above and a close above, even on a daily, you can get long with a stop below the previous day low, fairly tight stop for a huge asymmetry if this is going to pop and get stupid to the upside. But equally, on failures at highs and closes back below the 500, you can get short with the stop above the high looking for an unwind. And these are areas which you should always be focused on because they're very interesting for asymmetry. Without a bias, you have to be open. New all-time highs are bullish, so you have to be open to the upside as well as the downside, but it's key to be able to identify levels that offer you this nice asymmetry. But also keep in mind here that especially if we start to see closes back below this 100-day, this 50-day here, even though I'm not too interested in the moving averages because they tend to be flattening out, here, what we're talking about weak structure, you've got a huge air pocket into 300 on NVIDIA. So that's clearly something you want to keep an eye out for. Now, another thing which I think is interesting is, again, to see how the bonds close here. We'll go into them in a little bit more detail if somebody's interested. But the other key dynamic is I'd be watching Nikkei very, very closely. Like we had a nice short in play here on the Nikkei. And basically, this is the queen of pumping, the queen of cocaine angel pumps. And here, the fact that this isn't catching a bid is fairly interesting. So I'd also be very, very interested to see how this trades. But if we break down, don't be surprised if you see a big flush all the way back into the 200 DMA. And again, this is interesting because of the implications it has also for USD JPY, even though I'm not a huge fan of trading Nikkei, right? Because it's, talk about something that's manipulated and very, very hard to risk manage. And the other thing is this DXY, right? Continue to remember, DXY, we are still into 109, 106, 103. As far as we're concerned, we haven't seen a range shift yet. To see a range shift, we need to get more constructive action below the 103. So right here, as long as this holds, right, the risk is that we move back into a little bit more neutral territory, and that's for a move back into the 106. Now, more daily closes, especially weekly close below the 103, that opens up that 100, and that's probably, equities going cocaine angel stupid to the upside. But as long as this holds, this rotation is in the cards back into that 106. And what that does also is make, all these reversals that have triggered on euro, where is it? Oh, sorry, this is the weekly. I have to go back on the daily to show you on, here we go. Sorry, daily, right? These reversals that have triggered, euro's already in play, but yesterday, the reversal that triggered on Kiwi, the reversal that triggered on Aussie, the daily long that triggered on CAD, et cetera, et cetera, et cetera. And that, especially if you see this gold unwind to the downside, this Aussie and Kiwi should get traction. Now, it could even it doesn't have to be for the end of the world, but it could just be a little bit of a retrace of this move. But you clearly want to be very, very careful playing against these if that gold has to unwind, because you're going to see that dollar strengthen, especially you're going to see some air come out of those commodity currencies, okay? Now, some of the charts, let's go. So first chart, GPB-AUD. I probably haven't looked at this chart for a gazillion years. What's going on? What is going on here? So is there a time frame you're looking at on this chart, or is just a general review? I mean, here I'm going to start. If you're looking at, again, let's be clear, no judgment at all, but this is a chart I would never trade and I have zero interest in. So, but you can have a very unbiased view. So here we're kind of hovering here, right? Trying to decide what to do with the strong fake out here. When you start to see this reversals on the daily, on the monthly, high odds that we try and test back the upside, especially here into this descending trend line. Okay. So now this is kind of chopping around, back into those highs, and you see that it's being sold. So it really looks that broadly speaking, it's still staying stuck inside this kind of pattern. Now, if you're looking at it on the daily, what is this telling us? Well, again, this is just complete chop. What is this? This is basically being stuck for like 50 days inside this area, doing absolutely nothing, right? So what it looks like is probably that with these kind of basing patterns, right, and this kind of hold, it looks that it probably wants to try and test higher, right? These are the levels it needs to clear. And if it can clear these levels, the risk is for a move back into those previous highs, right? You could see we had the market trying to keep pressure on this, right? And then the moment it broke up, it's basing, right? It's basing. Now, keep in mind that sometimes markets correct sideways, right? So what I would be more focused on if you're looking at this in terms of bigger picture is looking at this broader range. Now, it's not ideal because it's not a flat range, right? You see it's messy, but you want to look at this range. And most likely what you see is if you get weekly closes outside this range, you'll probably get strong continuation to the downside. It probably means all the way here into this support zone, around low 182, something like that. And above here, it probably means it's going to make a run for 199 to that kind of level, right? But again, this is really not something I would trade. And if you ask me as a retail trader, these are not ideal to trade. Anyway, I'm not going to go into that discussion, but this is the chart. This is my view of the chart. So then we have Euro CHF. Hope that was helpful. So Euro CHF, what's happening on Euro CHF? So, here you've got a situation where if I were to be, kind of scare the children, what they say in the market is there is no such thing as a bad tick, right? So usually these levels always get tested, get retested. So that's to scare the longs. But anyway, let's look at it in shorter term. Here, it just looks very heavy, right? It looks very heavy. The market can't catch a bid and it's looking extremely heavy. So here, really, even if you look at it on this daily, it's on the edge, right? It's sitting on the edge. And what is the edge here is this is not a kind of area where you want to get funky trying to get long with a tight stop below, because you don't know what you've got under here. You could get very bad fills. You can get very bad surprises. Now, if there's some kind of event, right, and you get some kind of flush to the downside, like some kind of big wick to the downside, and then it closed back above, then that could be an interesting tactical long, right? But as long as it's trading like this looks like it wants to trade heavy. It wants to clear these stops, right? And then it's anybody's guess what it's going to do when it clears the stops. But, you have to be very, very careful on these flushes. Personally, if I could offer a piece of advice to any junior trader or newer trader, is trade something else. This is something where you can get into a lot of trouble. But bottom line, chart, it's looking heavy. If it can hold and it can flush here, there's a potential for a corrective bounce, but it's still going to be heavy, right? It's still going to be heavy. Oops, that's not what I wanted to do. What else are other people asking for? Talk about Darwinex. You can go on my blog. You can always send me a contact on the blog if you have any questions, but it should be fairly self-explanatory. It's a win-win situation. You've got absolutely no downside. It just is just stupid how win-win it is, right? It's really a no-brainer. Crude and nat gas. Yeah, sure. So what's going on crude and nat gas? So let me just be boring again. As a junior, new retail trader, as a professional retail trader, a great way to go broke is trading nat gas. So personally, I'd have no interest. You can look at nat gas. Everybody trying to buy the invasion, Ukraine, right? What happened? Same as wheat. They're very hard things to play. People get in trouble. Different kind of instruments, different kind of pit times, different times. It's just, you're asking for trouble. So I would stay away from nat gas, but I'll look at it in a second for you because that's what we're here for, right? So crude here, we're trading particularly heavy, right? Really not a good look. And in terms of crude seasonals, what you tend to see in crude seasonals is, keep in mind that, the worst month for the year for crude tends to be November, then followed by July. But that whole October, November stretch is very, very heavy. December is so-so. January is so-so. Really, the strong seasonals in crude tend to be February, March, April. So if you're looking to get long crude here for a seasonal play, right? You see what I mean? You're better looking at it, you're better looking at Feb, March, April, or sometime in Jan, right? In terms of nat gas, in terms of seasonal, December is one of the worst months of the year. And January is like the third worst, and February is the worst. So if you're looking at nat gas for seasonal plays to try and get long, you ain't even looking yet, okay? Because it tends to be still very, very heavy. Now, so here, what's going on in cuts agreed on? Hey man, find me somebody who's consistently making money trying to trade OPEC headlines or what OPEC is doing, right? You're just making it harder for yourself. Just look at the charts, and the charts will guide you. Everything you need to know is reflected in price without making it harder than it should be, right? At least that's the way I look at it. So here, yeah, I know a lot of retail traders going broke trying to trade nat gas and crude. looking cool on Twitter, but going broke. But, even professional traders go broke trading that gas and crude. So you're really making it harder than you should. But here, what is the chart telling you? Especially if you're getting OPEC cuts and yada, 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 yada. What this chart is telling you is this looks like doo-doo, right? So again, there's still going to be apparently Biden and co. need to buy a ton loads to refuel the SPR, yada, 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 yada. We'll have to see what we get, but this looks like crap, right? This looks like crap. And the risk here is, as everybody wants to get long because of Middle East tensions, everybody wants to get long because Biden and co. need to refill, everybody wants to get long because OPEC is going to support. The risk is that this clips the downside and you get a very ugly looking candle, and then it's probably a nice long, right? And then it's probably going to be a nice long. But if you're asking me what my feeling is, probably there's still too many longs trapped, and they're still wishing or hoping, and maybe we need to flush them. We need to get into a situation where people get completely depressed and say, oh, darn, they cave in on all the longs. But here, this is a super interesting zone. I would much rather look for longs around the 70 mark than here at 73. And I would much rather look for longs after I see how this is tackled the 70, what kind of action we've seen here. But this is very heavy, right? And like a lot of charts, even on a bounce here, there's still an awful lot of overhead resistance. So this is a little bit messy. To me, it's not cheap enough to buy, and it's not expensive enough to sell. On a bigger picture, intraday, of course, there are a lot of things to do every day, but here I would be very interested in what happens around here, if we flush, if not, if there's a steady bid, etc., etc. But even if you look at, in the midst of all the theoretically, the comments we're getting is, look at these candles on the weekly. This is heavy, right? If economy starts to slow, demand starts to slow, this ain't looking good. And the chart is telling you it's still not looking good. So I'd prefer to see some kind of a catalyst before trying to play. And if your question is on seasonals, it's still not the time to look at seasonals here, right? And in terms of nat gas, you were asking for here, nat gas looks like doo-doo. Again, the only time I like to buy nat gas is when it's trading with a one handle and everybody on Twitter is saying it's going to go to zero, right? Then you have to start to get interested. But right here, this is ugly. Even technically, look at this this break. We all know what happens on these kind of breaks. They tend to do this, go back to the scene of the crime. And especially this is still seasonally in a very bearish pattern. I mean, I definitely wouldn't want to be looking to get long here. And in general, I don't want to be short any kind of commodity, right? And especially not with all kinds of geopolitical risk and what stuff that's going on here. So that would be my take on nat gas and crude. I hope that was helpful. Any comments, any questions, anything anybody's looking at? Let me see if there's anything else anybody asked for that I didn't cover. GPB AUD, Euro CHF, that's covered. You've got a 45 target on WTI, good luck. You've got 83 target, good luck. Yen, please, sure. Yeah, yen's an interesting one. This is quite an interesting location. By the way, I say good luck on targets because, again, anybody, anything can happen. And as long as you risk manage your trade, everything goes, right? So here, yen, this is a very interesting location, right? So what's going on yen, right? So we got to stall at those highs. And especially the fact that we've been talking about this for a while, that Nikkei wasn't holding the pump anymore, that we had the turn in bonds, yada, yada, yada. That was a interesting sign, an interesting opportunity to try and play for some downside in the yen, right? Now here we've reached a very critical situation, right? Because we're back at the bottom of this channel, right? We're back at one of the key supports we were looking at, and you've had that. You see the daily reversal right at that level, triggering a long setup, right, on paper. And also at the same time, when you've got gold, looks like somebody's taken like, a sledgehammer to the knees, right? So if indeed, bar anything crazy, just looking at the cross market correlation, seeing what's going on, if we're going to see maybe, those equities that the move a little bit, that gold come down, that dollar move we've seen on euro and on Aussie, on Kiwi, etc., try to accelerate, you see that USD bid here coming in, this should be supportive for USD JPY. Now, a lot of people like holding USD JPY short over the holidays too, because it tends to be prone to doing some stupid stuff, usually to the downside. So anything goes here. The question is really what kind of time frame. Here, this is a really interesting one because we're pretty much split with people. On one side, you have people religiously believing that this is going to be in the 200s next year. And, equally are people saying this is going to be trading 120 before the end of the year by Jan. So it's an interesting one. Personally, I think in the same way as, the SMB killed CHF, BOJ's killed JPY trading for me. So I trade this a lot less. It's interesting. It's still technical, but there are just so many, so many things that can happen, so many headlines that could hit, and that I prefer trading other stuff. And these are very tricky to risk manage because you could get stupid moves at stupid times. So I personally don't want to be necessarily involved. I'm always tempted on USD JPY, but I try not to be involved because especially here, there's some, the charts are in sync. So there's a way to express whatever trade you want to have on here on another instrument, where even though it might tend to all move together, you have less chance of having a stupid overnight move just on a silly BOJ comment or something like that. So that's the way I look at this. Okay. And, to be clear, I don't really care which way it goes, or I don't necessarily have a view. I'm just looking to trade each chart independently here. More than happy to trade anything. Yeah, here when those, the moving averages, right? They're just, they're giving you a signal of trend. So by definition, they're a lot more interesting when they're slanted or where there is a trend. As soon as you start to see those moving averages really flatten out, the only thing they're telling you is that, there's no trend. So they're far less interesting as a directional indicator. Now, they usually line up with something else, and they may be interesting as minor support or resistance zones, but they're far less interesting when they're flattening out, right? Thanks for the comment. Far less interesting when they're flattening out. Okay, any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? I'm more than happy to take any other questions, look at any chart anybody wants to look at. Let's see, is there something super interesting that, as we said, you can look at Fangman, gives you a really good idea of the unwind you're seeing in tech, right? That's what it's all about. It's this unwind in tech, whether you're looking on the daily, on the weekly, monthly is going to be interesting, but it's just money's moving out of tech and moving into Russell and YM. And what you have to look at is, usually people misunderstand rotations. Rotations are bullish for the market, right? So if you want to get aggressively bearish, you need to see everything getting sold hard, not rotations. Those are bullish. DAX. DAX. DAX is doing what ES, NASDAQ, and then YM did, right? What we talked about, those trend lines, whether it's to the downside or the upside. Once they break, where do we tend to go? We tend to go back to the scene of the crime, right? So if you're looking at that, or even you're looking at Euro stocks, same thing. We break higher and we're back to the scene of the crime. Now, what's interesting is that you're getting this squeeze, this CTA squeeze, this pump at a time where, as we said, at the same time, you're getting Nikkei is not holding the pump. And then if you look at something like, look at HSI, I mean, this does not look good, right? This looks sick. Look at China. This does not look good. This looks sick, right? So again, as I said, the pump is real and markets want to go higher and they want to continue to trade higher, but they are rallying on poor structure. So you have to be careful because there are a lot of air pockets. So here, again, this is, as we mentioned earlier, right? This is a very interesting zone for DAX or Euro stocks, if you like these, because these are levels all of a sudden that they offer asymmetry, right? What does that mean? Is that as we get into these highs, either selling failures with stops above whatever high for a correction, or buying a breakout to new highs with stop below the lows looking for a continuation, give you very interesting RR. So these are all charts that are extremely interesting. Now, again, personally, I always prefer to trade ES, the US indices, but you know, it's very similar dynamic, very similar thing is going on there. Okay. Well, you know, you could argue that the Christmas rally came early this year, but remember, the Christmas rally as defined by the people that talk about it, or as defined by the inventor of the Christmas rally, is the last 5 days of December and the first 2 days of January. So you have two ways to look at it. Some people are going to say, Christmas rally came early. There's no way we can go higher. Sell, 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 sell. And the bulls are going to say, no. That was just a corrective move following the CPI. CTAs got squeezed. We had to reprice, but that has no impact. We're still going to get a Christmas rally, right? And at the end of the day, those are opinions. And you know what they say about opinions. I'd rather look at the chart and trade whatever sets up on the chart. Understanding the context, right? What that means is that, again, if we start to see some heaviness, there are interesting shorts to be had because this is rallied on poor structure. If going into the end of December, when the real Christmas rally tends to come in, we start to see bids and it starts to move, then it's probably time to press the upside, right? Let the chart and let the price action guide you. It's hard enough to get a trade right, to size it, to manage it, than having to get the crystal ball stuff right. Okay? Good stuff, guys. So last chance, comments, questions, or we're gonna call it a day. Again, we can do another one. I've been busy lately, but we can do another one before the end of the year. Maybe even the last week of December, I'm going to be around. Probably not going to be trading, but I'll be around, so we can probably do another one. As usual, guys, thanks for liking. Thanks for commenting, even for guys talking here in the session. It's always funner than talking by myself. Be careful. There's likely going to be an awful lot of opportunity. We also have the FOMC coming up. It should be a really, really interesting end of the year. Especially next couple of weeks should be extremely interesting. And again, I hope to see everybody before the end of the year on another live stream. If not, all the best for the holiday season, but catch you guys soon. All the best. Thank you so much for stopping by. Take care. Bye-bye.